Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, I'm going to be going over how to optimize your entry points in an attempt to take less heat, right? When we get into a trade, in one of the videos that we actually just did not too long ago is talking about the maximum adverse excursion, maximum favorable excursion, all of those things. Well, how do we reduce that, right? What's one of the tools that we can use to try to better our entry point to take less heat? Is there a way? Right? How do we do it? So first off, we have to have an entry already in mind, right? Without an entry already in mind, this isn't really going to help a whole lot. But once we have a zone of interest, like let's say as an example with this movement to the downside, we've got a nice bear trend that's working its way lower, but it looks like they kind of overdid the bottom. And if they overdid the bottom a little bit, maybe they want a slightly deeper corrective phase back up towards the top of the channel or a little bit above. And if we look over, there's a very nice POC that's hanging out at 14,800. So if I wanted to enter, that's a pretty nice spot to potentially look for that entry point to get things going to the downside. Now, if I were to enter directly on top of 14,800 and I put my stop above the highs. Now, if I'm looking for a downside target, you'll notice that my target is just underneath the lows. Now, that may not seem like a huge deal, but that does decrease our probability of success. So what we need to do is try to get that up a little bit further. Now, as far as the entry point is concerned, this is, right now, a 3-to-1. With the 3-to-1, it does kind of fit inside there just barely. If we get it up a little bit further, now we can creep that target inside of the low. So it's not a huge difference, but we've optimized our entry point by a little bit. Now, what if I want to approach this from a slightly different perspective? Maybe I'm not comfortable looking for a 3-to-1. Maybe I'm looking for, let's try that again. Maybe I'm looking for like a 5-to-1. Right? I know the probability on this trade is bad, but if I go for a 5-to-1, that puts my target way out here. That's just not going to work, or at least not from a probability standpoint. If I want the best probability, but I still want a 5-to-1, I'm going to have to creep my entry up even further. So we know that the entry point originally started for right about here for the 3-to-1s. And if we creep this up until we see our 5-to-1, there's the 5-to-1, a little further, come on, right inside there we go. So now we have our 5-to-1, and this creates an optimized area of interest for our entries. Now, it doesn't necessarily mean that you have to enter within this zone, but this does mean that this area, more than anywhere else, is going to draw in a lot of attention. Because this, rather than somewhere else, is where sellers have their risk reward in line with the overall pattern. They're still looking to sell the POC, they're still looking to continue the trend to the downside, but they're trying to do it in a way that is favorable to them. So what a lot of traders will do now that they have their optimized zone of interest is kind of monitor it, wait for the market to start reaching up there, and once we've gotten to the zone of interest, they know that right here, right now, even though it's not technically to their entry point, this is where sellers can potentially start backing off. But as far as an optimized entry point to ensure that their risk versus their reward is in as good of a probabilistic standpoint as they can get, even though it is a 3-to-1 or a 5-to-1, it still fits in that area. So this becomes the major zone of interest. Now you'll notice it's still responding to the POC, it still is rejecting back down again, but it's more so rejecting out of the zone of optimized interest rather than just that POC. You'll notice if you compare the two, it's twin reversing out of here. It's wicking off of this. It's not doing that off of the POC. Now, it's not that the POC isn't here and creating a barrier, but the algos and all of the order flow is going to be happening up here because, again, that's where the risk versus the reward lines up. Now, if they start churning back up, notice it hits the high of it, immediately responds to it, tries to break above, immediately responds to it. And again, the reason the market is responding to this is because this is where their entries are optimized. They still know that the probability on the trade is bad. They're not looking for this to trade, more than 20% usually with a 5-to-1. So realistically, they still know the trade is bad, but if they can edge that probability in their favor by an extra 1 or 2%, over the course of 1,000 trades, that's a big deal. Now we'll have to wait and see how they want to follow through and continue back down, and we finally get the breakdown. Now you'll notice, if we were to look at the POC and we just blindly sold at the POC, it still worked, right? But the goal here is to take less heat. I don't want to take any heat, preferably, but again, nothing's perfect and we're going to. And this first test almost took none, comparative to if you would have entered a little bit lower at the POC. And if you were looking for an entry at the top for that 5-to-1, it took almost none. And that's the whole point of optimizing your entry, to take less heat. Hopefully you found this video useful and interesting and maybe something you can add to your tool belt. Of course, if you have any questions about it, feel free to drop them in the comments below or shoot me an email, jhb@ssftg.com. Until the next one, enjoy, rest up, and we will see you all then. Thanks. Bye.